All right, let's start off with retail sales. So retail sales, that data just came out about 15 minutes before I went live. And it's actually a little confusing, but a little bullish, but a little not bullish. So retail sales for December comes in at 0.4% versus expectations of 0.6%, which is lower than expected. Actually kind of surprising because December is like the holiday month, right? Like you would imagine December is a massive month for retail sales, but that wasn't, I mean, it was a massive month, but I guess the expectations either were a little too high or maybe December disappointed just a little bit from 0.4 to 0.6. So that's the retail sales data. Then initial jobless claims, 217,000 versus 210,000. A slight beat in terms of the amount of jobs the amount of people that filed for unemployment. But it is a beat. And so essentially what do you conclude from this? We have less sales in December than expected and more people filing for unemployment. Not amazing news for the consumer, but the market couldn't be interpreting it as, hey, that's good news because that means we have less spending, we have less jobs, which eases inflation. And if you ease inflation, that could get us closer to a rate cut. So technically, the market's actually not upset about this. You're not seeing the market be like, oh, 5% down, the consumer struggling, yada, yada. It's kind of bad news is good news. Target's down for a different reason. We'll talk about Target in a bit. But even Tesla down a little bit after having a monster day, up 8% yesterday. NVIDIA's up 1.4%. Palantir's up 1.3%. Robinhood 4580 up 0.52%. Grab is up 2.24%. S&P's kind of muted reaction, 0.12%. So the S&P is not giving back the 2% it had yesterday. We'll see how the market opens at 9:30, but it's also not getting a ton of momentum. Maybe, look, I think this retail sales data is still pretty weak in the context of getting us a rate cut. We would need to see substantial retail sales data declining for the market or for J-Powell to be like, oh, people don't have jobs. They're not spending money. They're not spending money. That means we need to lower rates to stimulate the economy. We're not at that point yet, particularly because if you look at the actual chart for retail sales data, I mean, take a look at this. $729 billion we spent in December 2024 as a country in the United States of America on everything from laptops to food, et cetera. December 2024, that was up 0.4% from November, and it was up 3.9% year over year. So we still spent 4% more than we spent 2 years ago. So it wasn't a bad retail sales reading. It was just a little bit lower than expectations, and the market so far has not really reacted in a negative way. So that's what we got in the context of the retail sales data. Now, what does that mean for the 10-year? Well, the 10-year is at least not at 4.8%. We're up a tick, 4.665, but we're not at 4.8, which is good. If we get back to 4.8, I think that's going to be hard on equities. But with the CPI data we got yesterday, it's going to be hard to get back to those levels unless there's other data that becomes more inflationary. And then the dollar, unfortunately, is not falling below 109. We hit 108.5 yesterday. We are not sustaining those levels. So the Dixie is going to be a little bit harder for those that are in Grab, Nubank, Mercado Libre, any international stock. This is the only thing I think that really matters over the next 6 months. Obviously, those companies have to have good earnings, but this thing's got to come down. And until it comes down, into the 101s, 102s, I think it's going to be tough for a lot of those other stocks to report in constant currency. And, that might end up messing up or at least affecting their earnings as well. So 109.22. That's up 0.12%. Again, retail sales and initial jobless claims not really affecting the macro, not affecting the 10-year, not affecting the dollar. And it looks like that's okay. It looks like that's okay currently so far in the context of this macro. All right, so that was the main macro data that we had to get into. Now comes the fun part. It's time to look at earnings. Time to look at earnings. So we got some good earnings, folks. We got some really, really decent earnings. So let's pull up the companies that we have to look at. I'm just going to read off the beats on the top and the bottom line, and then we'll look at the individual tickers. Obviously, TSM, I think, is the star of the show today, up 5.5%. It was up 3% yesterday. This is already a $1 trillion company, and it looks like it wants to continue staying a $1 trillion company. And we talked about their December numbers being incredible yesterday. So we kind of all knew this was going to happen, but they crushed it. They absolutely crushed it. So TSM, the market wanted 26.3. They brought in 26.8. That's a beat. The market wanted 216 of EPS. They brought in 2.24. That's a beat by 3%. Crushed on the top and the bottom line, growing 37% year over year. I don't understand how anyone can see those numbers and not be bullish NVIDIA. Like it just seems like their growth is growing but their growth is performing at an absolute incredibly strong level. Then you have Morgan Stanley, revenue of $15.03 billion, $16.22 billion. They beat. That's up 7.9%. EPS 169. They beat by 30%, $2.22. This is similar to Goldman Sachs. Morgan Stanley's up 2%. Goldman Sachs beat EPS by 40%. Morgan Stanley beat EPS by 31%. Again, financials in a very, very good situation. US Bank, revenue 6.9 as a market wanted 6.99. They brought in 6.98, a little bit lower than expected. I mean, literally 0.16% lower. And then EPS 1.05 the market wanted. They brought in 1.07. That is a beat for US Bank, which is not bad at all for another financial. They are down 2.48%, probably on that revenue miss, but that miss is very small. And then you had Bank of America, 25.1 the market wanted. Bank of America brought in 25.5. That's a beat. 70 cents of EPS the market wanted. Bank of America brought in 82 cents. That's a beat. Bank of America is flat right now. Again, Bank of America, like JP Morgan, one of the better performing stocks in 2024. So they're going to have to really put up the numbers to continue to get momentum. But still, they were up 2.8% yesterday, and these earnings justify the momentum that they're getting from yesterday and overall from 2024. So the banks crushed it. TSM crushed it. And then we also had a couple others. UNH, let's take a look at them. They missed on revenue by 1%. They beat on EPS by 1%. Let's look at UNH. They were up a little bit this week. They're down 4%. Now, granted, they were at 475. They went all the way up to 543. They're down at 519. So I think this one is a bit more volatile based on all the other stuff that UNH has going on. But the earnings were not bad. I mean, they beat on EPS, very slight miss on revenue. So overall, strong earnings across the entire market, not bad earnings. And it looks like the consumer is in at least a decent spot. Robinhood right here is up 1%, 45.96 in the pre-markets. And it looks like companies, particularly financials, are outperforming. As a result, SoFi up another 0.64% after being up 6.97% yesterday. Why? Because if all the banks are doing well, SoFi probably is going to do well. SoFi is going to grow a lot more than these banks. And in a couple of weeks when we get their earnings, it looks like the market's going to be pretty damn excited about SoFi. Symbiotic is up 20%. That's another company that had earnings. We were actually talking about this. We were talking about Serve Robotics, but Symbiotics is a bit of a different one. This one's up 21%. It was up 7% yesterday. I think this one was a target of a short report a couple of months ago, and they got hit pretty badly, but it looks like their earnings also were pretty strong. If they did have earnings today, I think they had earnings. Let me make sure. But they are up 20% currently right now. Oh, no, I don't think they had earnings today. AI-enabled, they're acquiring a company. AI-enabled Symbiotic company will acquire the advanced systems robotics business from Walmart for a total of $200 to $350 million. Wow. Huh. So they didn't have earnings today, but they bought Walmart's robotics business. That's pretty damn incredible. Did not expect that. Walmart deal. Interesting. So this is so funny because everyone's like, well, Walmart's just going to build their own humanoid robots. They wouldn't buy from Tesla. I'm like, dude, Walmart, Amazon, these companies are not in the business of making robots. There's a lot of tech that's involved. There's a lot of hardware. Like that's just not what they want to do. They are in the business of just licensing it and buying it from the companies that know how to do it. And the fact that they're selling off the robotics business to Symbiotic, which is a much smaller company than Walmart, also shows the momentum in the overall robotic space and the fact that a lot of the retailers just don't want to deal with that. They'd rather, license it from someone else, which makes sense. Again, that's not their core competency. That's not what they're supposed to be doing. Okay, so Target's down right now because Target actually gave a little bit of preliminary guidance. We'll pull up those numbers in a second, but that preliminary guidance was on the high end, but it wasn't as high as the street wanted. So they didn't report earnings until February, but they did release like December sales and retail data and all that stuff. And it was good. It wasn't great. It was good. It was way better than the Q3 massacre that they had when they basically said that, people aren't coming into the store anymore. So they increased traffic, they increased advertising, they increased the web traffic, they increased in-store traffic, but it wasn't as amazing as what the street wanted. So that's why that's down 3%. I think that's a little bit of an aggressive reaction. Target earnings overall, or the preliminary earnings, are pretty decent. However, Target's kind of in like a recovery mode ever since they fell from 170 back to 129. And yeah, they have the dividend, but it's going to take them some time to turn things around. So that's why that stock is down 3% right now. Okay, so that's what we got on earnings. Retail data is good. Earnings is good. Yes, we talked about the Grab BYD partnership last night. is very bullish for Grab. But again, the big thing for Grab is that they got to get that dollar to come down. But overall, not only do they have a bank that's IPOing that Grab owns 16% of, but they are now partnering with BYD, having 50,000 vehicles. They acquired this company in Cambodia a couple weeks ago. I mean, like Grab is just absolutely killing it on all cylinders. It's just a high dollar. Until that high dollar comes down, Grab probably stays below that $5 range. Let's talk about, well, SoFi's at 15.8. Okay, that's great. Let's talk about what was going to bring up? Let's talk about the Blue Origin stuff that happened last night, and then we'll get to TikTok. So SoFi right here. Wow, that's a big green candle. Either that's a wick and that goes back down, or that's legit. That's a nice 2% run on SoFi. Yeah, it doesn't look like a wick. It looks like it's sustaining itself unless it just falls back immediately. I don't know what news came out on that, but someone knows something, and that's why SoFi just got a nice tick. Yeah, it's going up. Yeah, it's 15.85. Look at that. 15.87. Either they're having a delayed reaction from all the good bank earnings today, or people are buying up SoFi. That might be one of the reasons. We also got the data yesterday on SoFi that William Blair did not put an official price target, but they issued a note to their clients saying that, hey, they like SoFi. They think it can go to $26. And in a Super Bowl case, they think it can get to $35 in the next 12 months. So you've got almost, 100% upside, more than 100% upside on shares based on that William Blair note. It's weird because it wasn't a price target. It was just like a recommendation of how they're thinking of shares, which I guess they're not an official analyst, but they're kind of analyzing it. And that definitely was one of the highest street targets we got on SoFi in the entire street. SoFi announces $525 million securitization agreement closed in Q4 of 2024 with funds and accounts managed by PGIM Fixed Income. All right, there is the release. That's what's getting SoFi some love. Let's pull that up real quick, and then we'll talk about Blue Origin. It looks like that's what's moving this stock right now. SoFi and PGIM. This is good. That's not bad. $525 million securitization agreement signaling continued demand for personal loans. SoFi announces that they're announcing a $525 million personal loan securitization agreement closed in Q4 2024 with funds and accounts managed by PGIM Fixed Income, one of the largest global fixed income managers with $859 billion in AUM. The transaction follows a $350 million investment from PGIM in May of 2024. Interesting. It builds on the $3.9 billion in personal loan collateral SoFi sold or securitized to date by the end of Q3, illustrating the value of the company's leading personal loan business. PGIM Fixed Income head said, SoFi's personal loans represent an attractive investment opportunity for PGIM, and we're thrilled to deepen our relationship with the company. We continue to expand our platform as an asset-based finance lender and source investments that provide compelling risk-adjusted returns for our clients with partners who put our customers first. Noto said, the investor demand we see for SoFi's personal loan underscores the quality and strength of our lending business, which continues to contribute meaningfully to our durable growth. We are grateful for PGIM's longstanding partnership as we help more of our members get their money right. Bullish. This is a company that invested in SoFi. Now they're having a personal loan agreement with them. It also is showing me that personal loan originations are going up for SoFi, which they should be going up for SoFi. Makes a lot of sense as they're increasing members and as rates have come down, which Anthony Noto, really wanted rates to come down in the summer of 2024 when he did that interview saying that he would be pretty happy if a Republican administration won. And in general, the bank's doing well. You have a lot of macro tailwinds with the banks doing better. The market considering SoFi a bank, but also a little bit more than a bank. And then the signing of these agreements just creates what it seems to be a perfect earnings setup. I think the most important thing for SoFi is if they can reverse the trend. For the last 7 quarters, SoFi has gone up in the pre-market on earnings and then come right back down. And it was always a dip to buy, but it was still really annoying, right? Because the market couldn't just give them the benefit of the results that they brought up. This quarter might be different, dude. I feel like this quarter might be different. They've got every tailwind they need. They're going to guide for full year profitability. Hopefully they guide for about 20% growth. And it looks like SoFi should be making its way closer to that $20 level. It definitely would be a lot more exciting for that to happen for SoFi. Shout out to Chad in the chat. When do we get Amit price targets? My price targets sometimes are all over the place. But in terms of SoFi, no, in general, I do think 20 by the end of well, I don't know, dude. By the end of the year, I think 25. And the reason I'm saying that is just because the macro is in a good tailwind. If you look at some of the other analysts, they think 25 is possible. And in general, the other thing that I think could make 20 to 25 happen is that SoFi is still 12% short, 130 million shares. down from 180 million, but still under 30 million for an amazing company that's profitable. Anthony Noto, great leader. I mean, they're acting like this thing is GameStop or something. Like that's a massive short float that should get squeezed eventually. And if it does get squeezed, then obviously that would be super bullish for SoFi on top of really good results.